While Walt Disney World totes the title of the happiest place on earth, some members of WallStreetBets may disagree, as they've bet their fortunes on the success of the House of Mouse. When the world shut down last year, closing the beloved parks and one of Disney's main income streams, Disney investors sounded the alarm bell and sold it as fast as they could, resulting in the stock dropping 40% to a 6-year low at a price of $85. Since that fateful month, Disney has successfully regained their position and more, rising 129% all the way up to $200, largely thanks to hopes of a reopening just around the corner, and the blockbuster success of Disney Plus, touting spectacularly successful original shows like WandaVision and The Mandalorian. It's incredible to see that it's made this recovery in such a short time, as Disneyland has been closed just 7 times in its 50-year history, and due to the lockdown, it was closed for an immense 412 days, shattering all records. Two traders on WallStreetBets, high on the excitement of Disney's immaculate recovery successes, decided to invest large sums of money into call options, betting on the continued success of the massive cash cow that is Walt Disney's creation, right around the peak in March. Our first trader, named Short Doge Master, is happy to announce that he proved his mom right and he's a complete failure. This poster invested $124,000, betting that Disney would rise an additional 40% from where it was at the peak by July, which is an aggressive bet considering Disney was at an all-time high when he placed this bet. His theory was that boomers were forced to stay home, save money, and be denied quality time with grandchildren on the heels of being retired. So when things opened up in 2021, they were going to go crazy at the parks and Disney could charge whatever they wanted while still selling out parks and hotels. Turns out I was wrong with all my logical thinking, he said. Sadly for him, the steam had run out on Mickey's Steamboat, as Disney had dipped down about 17% since he purchased, requiring Disney to almost 2x in just 2 months in order for him to break even on his trade. Disney is the land of magic and wonder, but sadly rising an 80-year-old company up almost 100% by July is a wish not even a fairy godmother could grant. If he had extended out his time horizon to a few years out for expiration, this could be an achievable number, but being so short and so aggressive, this was an incredibly risky bet, and betting $100,000 is a great way to lose money. If a $124,000 bet wasn't enough, user Jamilstar decided that he'd up the stakes, placing $1.3 million into call options at $200 and $220 strike prices, with some expiring in July and most expiring in January. His thesis was Disney Plus is rapidly growing, and Disney will eventually command Netflix's valuation. In addition, theme park revenue after COVID will fly. I still believe in this thesis, but when I bought these, I thought COVID would be over by now, and it clearly isn't. Also, Disney Plus numbers were juiced, and it showed in the last earnings report, so growth is smaller than expected, and he dumped the calls and kept his shares. Sadly for him, Disney dropped, plummeting his positions down $1,010,000, making this one of the largest losses of the week on the subreddit. These traders bet on one of America's most successful companies and sadly lost out. But hey, Disney's been losing people money for decades. Just look at the rate these tickets have been increasing over the past 50 years. Subscribe for more, and I hope to not see your name next to a lost flare in the future.